you're either a beginner, an intermediary, or an advanced Forex trader who is looking for a simple yet very effective and very profitable Forex strategy, then you have to stick around to the end of this video. Because on this video, I'm going to be showing you guys a simple yet very profitable strategy which I'm going to be borrowing from Godlove University. The name of the strategy is called the GUORB strategy. GU stands for Godlove University and ORB stands for the Open Range Breakout Strategy. I know it's sounding a little bit intimidating, but don't worry. I'm going to break everything down to the layman level. And at the end of this video, I promise you, you'll be able to start using this strategy to trade on either your private account or your prop firm account. Because I'm going to break it down in a way even a 10-year-old can be able to use it to trade at the end of the video. I'm not just promising, I'm going to deliver those results. So make sure you stick to the end of this particular video. Let's first of all dissect the name of the strategy so that you guys have an idea why we are even trading. You don't just trade with the strategies because you just pick it somewhere. No, I custom made that strategy and it has transformed hundreds, if not thousands of traders in Godlove University. And I didn't just pick one strategy from the street and I picked it, then I fine-tuned it the way that could work. So like I said, GU stands for Godlove University, which is my academy, which if you want me to mentor you one-on-one on how to trade the Forex market from A to Z, beginner to pro, then with my 10 years of experience, I have been able to program a dedicated course that is going to guide you A to Z. I'm also going to hold your hand, do Zoom sessions, guide you on how to be profitable. So you can always check the link of the Forex course or Godlove University on the video description. So GU stands for Godlove University and ORB stands for Open Range Breakout. The Forex market operates in sessions, all right? I'll call it in zones/sessions, meaning the North America or the Americans have their own session. The European Union or the London traders have their own sessions. The Sydney or the Australian traders have their own sessions. So all of that is called the market sessions. And these sessions have something which is very peculiar to them, which is the opening and the closing of those sessions. It's like you being in primary school or being in the university or being in kindergarten or anything. You have the moment where the school starts and you have a moment where the school is closed. It's the same thing for Forex market sessions. There's a particular hour of the day that a session starts and a particular hour of the day that a session is closed. On all these sessions, we're going to be talking about. So that's what we're going to be taking about. We're going to be taking advantage of the opening and the closing of this major market session. That's what we are taking advantage on this particular video. We want to be there at the opening of the session so that we can be able to take advantage because momentum is going to be coming in. There are new traders that are going to be coming in. There are traders that are going to be adding new positions. There are traders that are going to be taking their profit. There are psychological factors that are going to be playing a bigger role at the start and at the end of major market session, which we want to take advantage of that. Because of these psychological factors, there's going to be a lot of volume at the start or at the end of session. There's also going to be a lot of liquidity at the start and at the end of session. So that's what we're going to take advantage, and I'm going to show you guys how you can take advantage of that. You can see on this screenshot we have 4 major market sessions. We have the Sydney or the Australian. So don't get confused if someone comes and says I'm trading the Sydney session or the Australian session, all right? So we have the Sydney or the Australian session, which the time is in GMT. You can see right there. We have the London or the European market session. We have the North American or the New York session, and we also have the Asian or the Tokyo session. So these are the 4 major market sessions. But in these major market sessions, there are some which we're going to pay attention to, which I'm going to also show you guys as we go along on the video. Now let me help you set your computer because you need to prepare your tools and get ready before the market session, before the session is open. Because at the start of the major market session, the reason why we want to take advantage of this is, remember, at the start of major market sessions, that's when banks are opening. If I'm taking something like the London session in South Africa opens at 9 a.m. All right, or 7 a.m. GMT. South Africa is GMT +2. So here in South Africa, the London session opens at 9 a.m. At 9 a.m., that's when the Bank of London, that's where the city, the USB bank, all those big banks in Europe, all those big banks, that's when the banks are going to be opening. It's the same thing. The more banks are opening, import and export, that's when even airports, all of that. So activity, that's when activity is taking, financial activity is taking place in the European session or in London. So that's why we need to be able to know the time, and we have tools that are going to help us to be able to know the time across different market sessions. So I want you to, number one, you need to be able to know the time each session is going to be opening according to your time zone, all right? According to your time zone. So what I want you to do is just go on Google and type Forex market session times, all right? Forex market session times, and the first link is going to be the one from Baby Pips. It's simple. I'm giving you guys free tools. You don't need to buy any tool anywhere. This is how you're going to prepare your charts, getting ready for the market session to open. They say proper preparation prevents poor performance. So we need to prevent that poor performance by doing proper preparation. So just go and type Forex market session times, choose the link that says Forex market hours by Baby Pips, Forex market time converter. Click on that link, voila. It's going to open this particular, it's for free. It's for free though. If you want to donate, to Baby Pips, there will be a link down here where you can donate to all of that. But it's for free. It's free to use. I've been using it for free for years now, for more than 8 to 9 years, right? Now come here and you can see it looks blurred because the market is closed. If the market was open, you'll be able to see this will be tick blue, tick red, tick blue, tick green, right? But we're still going to be able to see what we have to see because this thing is actually still moving. If I have to go, let me zoom in. You can see this is actually moving. The clock is actually moving as we speak. Can you see? The clock is moving as we speak. And this time is according to my time in South Africa. Wheresoever you are located, this is going to show according to your time because it's going to pick. Don't use a VPN. Make sure you are not using a VPN or a VPS. Use your computer or your phone the way it is so that it can pick your IP address, your original IP address. Because if you are using a VPN or a VPS, it's going to be picking a different IP address somewhere. So for me, in South Africa, you can see my time as I'm recording this video. It's actually 11:45, and you can see here it says 11:45. So it's going to show you the exact time, right? What you need to do now is to be able to use this can move up and down. So you just click up here on the clock and you can drag it up and down. By dragging it up and down, you'll be able to have an idea on when each section is open and closed according to your time zone. Remember, this is already converted according to your time zone, so you don't need to confuse. So let's start setting. Let's go and set our market sessions. These bars on your screen, the bars you are seeing right here, like I said, if I go here, you see they all turn blue and green. But these bars you are seeing here, these bars you are seeing, they actually show you the open and the close of major market sessions, all right? So for example, for the Sydney session or the Australian session, you can see it right here. It opens at 11 p.m. South African time and it closes at 8 a.m. South African time. The Tokyo session opens at 2 a.m. South African times and it closes at 11 a.m. South African time. London session opens at 9 a.m. South African time and it closes at 6 p.m. South African time. New York session opens at 2 p.m. South African times and it closes at 11 p.m. South African time. So you can see anytime you're tracking, you're already reading the time up here. You're reading the time up here. So let's go on TradingView and set our chart so that this time is reflected on TradingView because you need to get the time correctly. Let's go on TradingView and I'm just going to check for the template, which is GUORB. I already have the indicator right here, so I'm just going to show you guys how to use it. You just need to click on indicators and search Forex market session. Take screenshot Forex market sessions by Leviathan. All right, Forex market session by Leviathan. You need to be able to choose this one. By the time I installed it on my computer, it used to be free, but after some time you needed to pay maybe $5 or something. But even if they say pay, you know, it's going to worth it at the end of the day, guys. But I'm not affiliated to this tool. This is the most important one or the most effective one I've seen. You can use different ones that will still give you the same results, but I use this one. It used to be free. You can try. If it's still free, then good for you. But this is the one I recommend, Forex Market Sessions by Leviathan. When you put the indicator, just click on indicator. It's going to come on your screen. It's going to look exactly like what you are seeing on my screen. But we need to be able to configure this indicator. You can see it shows us all the Tokyo, London, New York. We are only trading the Tokyo, the London, and the New York. We are not trading the Sydney or the Australian session, all right? We're only trading the Tokyo, the London, and the New York. But now we need to make some settings to make sure the time we are getting from Baby Pips Market Sessions Converter is corresponding to the same one we have on Tradingview. So come on Tradingview, and on the bottom side of your screen where it says time zone, just click there. And if you're someone like me who is in South Africa, just look for Johannesburg. You will see Johannesburg will be something. UTC also stands for GMT. UTC stands for GMT. So look for any time that is GMT +2 or UTC +2. So even if you check and you don't see Johannesburg UTC +2, just look for any time that is UTC +2 and click on it. So in my case, let's check. If I'm going down, you can see UTC +1. That should be Cameroon. It's also UTC +1. Lagos, Nigeria. Nigeria is right there, UTC +1. So if you're in Nigeria, you need to click this one, UTC +1. For me, I'm in South Africa and it's UTC +2. Johannesburg is right there. Boom, you just click on it. Now, it should be able to show here. That's the time right there. You confirm this is actually 1 minute past 12. And if I can check up here, that's the correct time, 1 minute past 12. So now we've confirmed that our time on Forex Market Sessions Converter on Baby Pips is corresponding with the time we have here on Tradingview, because you need Tradingview to do your analysis, and then you just go on MetaTrader 5 to place your trade. Since that has already been confirmed, what we need to do now is to go on the indicator and we'll make some settings. So just click on the indicator, that is it right up there. Click on these three dots and then go to settings. When you click on settings, this window is going to open. This is where we're going to set up the indicator. I want you guys, if your Sydney is still ticked, untick the Sydney session. We're not trading the Sydney session, so make sure you untick that. And then we're going to start from the Tokyo session. Before we even start on the Tokyo session, come down here where it says time input time zone. Normally, when you just get the tool, when you just open the tool, it's just going to be UTC here. Make sure you come there, and based on wheresoever you're located, if you are like me who is in South Africa, put +2. So that it's going to rhyme. You need to come there and you put UTC +2 because my time zone is GMT +2. So that this time will rhyme with your Tradingview time, and it will also rhyme with your market session time on Baby Pips. With that, everything is at the level ground. Everything is the same, and you're not going to have one time showing you 11 p.m., another one showing you 1 a.m. So make sure, please, this is very important. If you're in Lagos, Nigeria, make sure you put here UTC +1. Cameroon, you need to check. I think it should be UTC +1 too. If you're in New York, just come here, you select your time, you will come here, maybe put UTC minus something. Put it according to your time zone. It needs to be specific according to your time zone. The same way you did that, write down here, so that your time here, UTC +2, should be. So what you have here should be the same thing you have here. And then we start setting it up. Our Tokyo session, if we go on investing on Baby Pips, Tokyo session opens at 2 a.m. and closes at 11 a.m. So we quickly go on Tradingview, 2 a.m. and closes at 11 a.m. The London session, let's confirm. Our London session opens at, this is London. London session opens at 9 a.m. and closes at 6 p.m. So 9 a.m. to 6 p.m. we come here. So it opens at 9 a.m. You can see we're still on UTC. We fix that, put it on 9 a.m. and it closes at 18 o'clock, which is 6 p.m. Voila, that is it. We go to New York. New York opens at, this is New York right here. It opens at 2 p.m. and it closes at 11 p.m. 2 p.m. to 11 p.m. So it's going to be 14 o'clock. So we'll come here. It's going to be 14 o'clock. Where is 14 o'clock? It's going to be 14 o'clock is right there, right up to 23 o'clock. 23 o'clock is right. Let's go up. 23 o'clock. Boom. So that is it. We've confirmed. We've confirmed the time we have on baby pips is rhyming. It's the same as the term we have on Tradingview. We've also said our market, so you followed all those instructions. So now you just to confirm again, 2 to this to this, because you need to have this correctly. If not, the strategy won't work as it's supposed to work. So you must have it correctly, right? So just make sure open and close is tick. Then hide weekends. You need to hide weekends because we're not interested on weekends, so you can hide weekends. Just tick these 2 boxes and leave every other thing to be the same way it is, or you can just pause the video and your settings should look the same like this, right? Then just going down again, all the same settings. I'm going to leave it the same way it is. On style, just make sure you tick everything here the same. Visibility, you can also just select everything you have here and boom, click on OK. Voila, that is it. If we can go right up here, I always like to start with gold or any asset of your choice. If we can go up here, let's confirm if our settings are correct. We have the 2 major market sessions we're going to be trading: the Tokyo, the London, and the New York. Tokyo or the Asian, London or the European, New York or the North American session. If we can come here, let's confirm the start. If you can just take my mouse to the start of this line here represents the start of a session, and the yellow line here represents the end of the session. This line here represents the start of the session, and this one represents the end of the London session. So let's confirm if it's actually correct. Tokyo session starts at what time? 2 a.m. If I put my mouse here, just look down, you will see it says 2 a.m. 02 a.m., which is correct. If I go back to baby pips, Tokyo session starts at 2 a.m. So it's correct. And then it closes at 11 a.m. So we need to also go and confirm. So you come on this last candle, if I put it there, 11 a.m. The same thing with London. London opens at 9 a.m. If it's showing 9 a.m. and closes at what time? And closes at 18 o'clock. New York opens at 2 p.m. That's it. If I just put my mouse there, it shows 2 p.m. and it closes at New York. It closes at 11 p.m., which is 23 o'clock. Very, very important. You need to confirm. So long as you've done this, you need to confirm that is correct. Your sessions are correct. Your time zone is correct. It's rhyming with what you have on baby pips market or time zone converter. That's it. Once you've already done this, now let's go to the methodology of the strategy where you're going to actually start taking your trade. Let's talk about the step-by-step process you need to be able to do to enter in a trade. What we're going to be using is what we call buy and sell stops. Buy and sell stops are for, the market stops where you want to cash a momentum continuation. You want to cash a market continuation. While buy and sell limit are used for cashing reversals. In this case, we're not trying to cash a reversal. We're not trying to cash a falling knife. We want to cash a trend in the original direction, in the direction of that trend. That's why at the start and at the end of major market session, if you are just starting with this strategy, I'll advise you just stick to start of major market sessions, all right? Because the end of major market sessions, sometimes the momentum is already done off. Many traders are already out of the market. Many banks are not more actively trading, and the volatility is very, very low. So when volatility is very, very low, you see the market start being choppy. When it starts being choppy, the probability of you making profits becomes slimmer. So you can just stick to opening of major market session, the open of the London, open of the Tokyo, open of the New York. All right, at the beginning, stick to that. Then you start backtesting. If you can also try the end of market sessions to see how it goes. But for now, for this example, let's stick to the start of major market session. You're going to have enough trades, don't worry. So in this case, the last 15-minute candle, the time frame we are using is 15 minutes. So you come on your chart, let's just assume the market is, this is actually 1:45 a.m. 1:45, the 1:45 candle, as soon as the 1:45 candle is printing, or as soon as you looked on your phone, based on wheresoever you're located. For me in South Africa, if I look on my phone and it's 1:45, what I'll do is I'll just come and I'm watching. I'm waiting for 2 a.m. As soon as 2 a.m. clocks at the dot, what you do is you come the last candle before the market opens. I used to see people make, now the modification, we've once talked about this strategy where we're using the first candle of the session. No, you are already losing the momentum. We are using the last candle before the session opens. So I'll just be watching on my phone and boom, if I see 2 a.m. pam, I'll just come here, the 1:45 to the 2 a.m. candle is going to be this one. So I'll just come, what I'll do is I'll put my buy stop below that 1:45 candle and my sell stop above that 145 candle. So this is what we'll do. This one is small. This is, if I put my mouse here, that's the 145 candle. So my sell stop is going to be here and my buy stop is going to be there. As easy as that. My sell stop is going to be here and my buy stop is going to be here, waiting for anyone that can be triggered. All right. We don't know whatsoever direction. We don't know the direction the market is going to go, but we know any direction it goes, we are ready to catch the move. If I can measure this distance from year to year, remember I'm doing this on gold, which is one of your points. This will work on any asset of your choice, any currency pair, Great Britain Pound USD, Great Britain Pound CAD, Great Britain Pound NZD, Euro. You backtest it on your end and you'll be able to look for your favorite asset. Even German 40, it will still work, right? Because the market is open on all those different market time zones. If I can measure this distance here, this is almost about 40 pips. All right, so from year to year on my 15-minute candle, this is about 35 to 40 pips. Right, so now we need to calculate the lot size we can use on both our sell stop and our buy stop. So what you do is you go to Godlove University. I'll show you how to calculate it. Let's just quickly go to Godlove University. Godlove University is right here. We'll just type on Google Godlove University. Let's just go through the normal way for those of you guys who are not using it yet. So just go on your Google and type Godlove University. It's right there. Click. It's going to be the first link. Once the link opens, you just check on the one that says Forex Calculator. It's right there. Trading Calculator is right there. Click on it. It's the first page on Google. You click on Trading Calculator. It's a free tool which I've already made for you guys to use. All right. So when you click on the Trading Calculator, you can see there's a notice here just telling you the current calculator. This one, just put your email address. It's very important. Put your email address so that you can be able to get access to the free tool. When you put your email address, the page will open to this one. Now I want you guys to, most of the time, if you come here and check this one, this tool will be going maintenance. It can be going maintenance. So just click on the alternative link. If this one is not working, click on this one. So just click on it and voila. This is the one we're going to be using to calculate the lot size we can use on both our buy stop and our sell stop. Here you just need to put XAU USD, which is gold. It's right there. Currency is USD. Account balance. Let's assume we are using a $100,000 pro forma account, right? So it's $100,000. Then let's assume we are risking 1% per trade. 1% per trade. Our stop loss is 40 pips. And then we click on calculate. Voila. So the lot size we're going to be using, we need to put this in terms of points. When it comes to gold, you need to put it in terms of points. So 40 pips is the same as 400 points. So you click on calculate. The lot size is going to be 2.5. You only on this website, Market Boost, that's the only thing I've noticed. When it comes to gold, you need to put it in terms of points. But any other asset, any other currency pair, you put it in terms of pips, meaning you won't need to add 0. So the lot size we can use here is 2.5 lot size. Now we have the lot size we're going to be using on the trade, and we also know the number of pips we're going to be risking. We need to now place our buy and our sell stop because we need to be ready. Remember, the last candle before the session, meaning the session is already open. You need to do that fast. You have a period of less than a minute to place your trade. With all those tools, you do it in seconds, right? So you need to make sure your buy stop and your sell stop, your buy stop is there, your sell stop is there, so that any direction the market want to go, you'll be able to catch the move and ride with the trend. You'll be able to catch the move and ride with the trend. Whether it wants to go up or down, that is not our problem. We want to ride the trend either way. Don't spend your time trying to guess what direction the market is going to go. Your rule as a trader is to manage your trade when the market has already taken any direction it want to take. All right? Because see, people spend hours upon days trying to guess wheresoever the market. No, you can't predict the outcome of a trade. Your rule as a trader is to manage your risks once you're already in that trade. So once you come to your MetaTrader 5 after already doing your analysis, using the risk calculator tool to know the lot size and also knowing the pips, you come on MetaTrader 5, assuming this is gold, you just come there. What was our lot size again? Our lot size was 2.5. So you put there 2.5, make sure you put it there 2.5. Once you have the 2.5, you just come here above, assuming this last candle was the last 15-minute candle, because by that time the next candle would have already, the 2 a.m. candle would have already opened. But this is the 1:45 to the 2 p.m. candle. So this candle is the one you are using to place your buy and sell stop. So you just come below that candle, put your mouse there, right click, You can go to trading, you can see sell stop is right there. You just sell stop, and you can see sell stop 2.5 because we already put 2.5 in this particular box right there. So the lot size you put here is going to reflect right here. You just do the same thing. You click there, boom, you click, you put your sell stop, you come above the candle, you right click here again, you go on trading, you see buy stop 2.5, and then you open your trading terminal. Trading terminal is this one right here. So you open your trading terminal, assuming we had a trade right there. This is the market is closed. So let me just open a trade on BTC so that I can show you guys what I'm talking about. Let me just go on chart window, and then I'm just going to quickly open a trade on BTC. Let's just put the BTC, and then I'll show you guys. Okay, so assuming this is a trade, the trade right here, you just come right click on it, you go to where it says modify position, where it's modify is right there, and under stop loss, you'll be able to see stop loss in points. You put there 400. Since it was 40 pips, stop loss will be down. It was 40 pips, the stop loss will be 400 points. Here is in terms of points. And then the TP, since you are going for a risk to reward of 1:2, will be 2 times your stop loss. It's as easy as that. So your TP will be down 80 points or 80 pips or 800 points. So quickly just come here. I put there 400 points, and my TP will be 800 points on both positions, both my buy stop and my sell stop. And make sure I put my stop loss and my take profit on my buy stop loss and take profit on my sell stop positions. You need to do all of that, and then boom. So long as you already do all of that, let's quickly go back now to Tradingview to see what happened. So remember, it was this candle right here. What happened? You can see our sell stop was triggered. And if I can put our short position, meaning our sell stop was triggered right here, our stop loss was exactly where our buy stop was. So the stop loss for your sell stop is where your buy stop is going to be, and your stop loss for your buy stop has to be where your sell stop is going to be. So this distance from here, the distance of that candle, the distance of the range candle, the candle you're using to put your buy stop and your sell stop, act as your risk candle. I call it the risk candle because the body or the range of that candle is going to help you to know your stop loss. That's why we measured this earlier, and it was 40 pips. So that's why our TP is going to be now 2 times that, which is going to be risk to reward or 1:2, which is going to be 80 pips. And you can see, boom, just 3 candles after that, and we're able to hit our TP right there. It's as easy as that. We're able to hit our TP. The same thing happened right here. You can see this was the start of the London session right here. And if you can just extrapolate this, the candle we're going to be using is going to be this one, it's going to be that one, and that one. So our buy stop is going to go here, and our sell stop is going to go there. And this distance from here to here is going to be our risk distance. So if we can measure that distance from this candle, this is the last candle, this green one, the blue one is the last candle before the session candle. So if we can measure from there to there, that's 63 pips. So we go back quickly to our trading tool. We are still trading gold, we are still risking that. So this one we put 63, and then we add 0, which is 630 points, and we calculate. So the lot size we're going to be using here is 1.6. We round it down to 1 decimal place, it's going to be 1.6. So we quickly just go back to our MetaTrader 5, we put there 1.6, put our buy stop here and our sell stop here. And in this case, boom, you can see our sell stop got triggered because our stop loss was here. Our sell stop got triggered. We're going for a risk to reward of 1:2, and we miss our TP. So we miss our TP right here. Now, this is where you need to learn. You can trail your stop loss. If we are trailing your stop loss, then this will be a break-even trade. Trailing your stop loss means once the market has already gone in your favor for 1 arrow, then you move your stop loss to break even, right? So in our case, you can see the market already went in our distance for 1 arrow, meaning at this point your stop loss would have been here, so that even if the market wants to go against you as what it did here, worst case scenario, it was a break-even position. Remember, we already made 2% here. This one was a break-even position, and then this is the start of the New York right here. Let's see what happens at the start of the New York. Start of the New York, where is our candle again? We are using this candle right here. So our sell stop is going to go here, and our buy stop has to go here. This distance from here to here is going to be our range. So let's quickly measure this distance from here to here. That's 63 pips as well. So we already did a calculation of 63 pips. So we're still using again this same calculation, 63 pips, 1.6 lot size. So we quickly just go back to our Tradingview or to our MetaTrader 5, and what we do is we place a buy stop just above this blue candle. So our buy stop is going to go there, our sell stop is going to go there, and boom, you can see what happened. Our buy stop was triggered, stop loss was right here. So our buy stop was triggered, we went for a risk to reward of 1:2, boom. We already made 2%, so we made 2% here. This one was a break-even trade because we were trailing our stop, and this one we still made 2%. So we made 2%, it was a break-even trade, we made 2% again. We've already made 4% of our account in one day. Remember I said as a beginner, just trade the opening of major market sessions, all right? Don't worry about the closing. It's only as you go ahead that you can start backtesting the closing of those sessions. For me, I trade sometimes both opening and closing, but if I'm not feeling too confident that day, I trade strictly just the opening of those sessions. And this was the end of the day. You can see the Tokyo session starts again right here. So meaning for this day, this was the start of Tokyo, the start of London, the start of Tokyo, which we made 2%, the start of London, which was a break-even trade, and the start of New York, which we made 2% of our account. Now, remember, you have both buy stop and sell stop in place. If your buy stop is triggered, you should automatically delete your sell stop. All right, you all know this through backtesting. Some people used to prefer to say, okay, if my buy stop is triggered, I'm going to leave my sell stop, just in case if it was a fake out, and it comes the opposite way, I'm still ready. I want it to trigger my sell stop. But now that's like a two-sided sword, because if it comes the other way and triggers your sell stop, now you've lost 1%, and if this one goes and hit your TP, you've made 2%. So you've lost 1% and made 2%. So at the end of the day, you made plus 1%. But it can still come the opposite way and trigger your sell stop and not go down and go the opposite way. So at that point in time, you lost 2% of your account. So that's what I'm saying. It's a two-sided sword. You need to be able to backtest to see which one works for you. If you're going to delete your sell stop, if your buy stop is triggered, or if you're going to leave your sell stop still there for maybe 3 to 4 hours before you actually delete it, or until your TP is hit on your buy stop before you did it. So you all know that from backtesting, but from experience, that's why I'm already giving you guys both scenarios. So this was a full day. If we even jump to the next day, which was a Friday, look at what happened. This was Tokyo again. Look at this. If we even jump to the next day, look at this, guys. This was the start of Tokyo. Where was the last candle before Tokyo? It was this candle. It was this candle right here. So our buy stop would have gone above this candle, and our sell stop would have gone above this candle. If we can measure this range, you're just doing this sharp. We measure this range from here to here. That's 30 pips. So we quickly just go on our tool. We are still trading gold. So we put there 30 pips, which is the same as 300 points. And we click on calculate. We are still risking 1% of our account. So the lot size is going to be 3.3. If you're risking 2% of your account, just put there 2. Lot size will be 6.6. But let's stick to 1% of our account. So it's going to be 3.3. You quickly just go back to your MetaTrader 5. You put there on the lot size place, you put there 3.3. And then you quickly just go there. You right click. And when you right click and go on trading, you put your buy stop right there with lot size 3.3, stop loss right there with lot size 3.3. What happened after that? Let's see. What happened after that? Our stop loss was triggered. Remember, stop loss was right here. Our sell stop was triggered, and we went for a risk to reward of 1:2. Boom. That's it. That's it. We're out of the trade. Just the next 3 candles, we're already out of this trade right there. That's it. The last candle before the session, if I can delete everything so that you guys can see, last candle before the session was this small candle. So our sell stop will go below, our buy stop will go below, all right? And then you can see our sell stop was triggered. What happened? We made close to 2%. So on Thursday, we made 4% of our account. Just the start of Friday alone, we've already made 2% of our account, 6% of our account. If we come here and backtest this one, this is a typical example on the one I was showing you guys. If we come here, where is the last candle before the London candle? The London candle is this one. So our last candle is this dodgy candle here. So we're going to put our buy stop there, and our sell stop will go right here. So in this case, you can see our sell stop was triggered, but the market didn't go our way. It instead retraced and triggered our buy stop. So this is what I'm saying, you need to backtest to see which one you can choose. If our buy stop was still in place, it means our sell stop was triggered, we lost 1%, we hit our stop loss, lost 1%, and at the same time, our buy stop was triggered and we made 2%. So we lost 1% and made 2% of our account. So it was plus 1% at the end of the day. You see, it was plus 1% at the end of the day. So you made 3%, you made 2% there, made 1% here, and the London, the same thing happens at the open of the New York. You would have had your buy stop right here. Your buy stop would have been here, sell stop would have been here. No, okay, the last candle is this one. So your sell stop would have been there, buy stop would have been there. You can see buy stop got triggered, which was a fake out. We lost 1%, and then boom, our sell stop got triggered and we made 2%. So we also lost 1% but made 2%. So plus 1% at the end of the day. So we made 2% here, made 1% here, made 1% here. So 4% for that day plus the 4% we made on Thursday. We are already up by 8% of our account. In 2 days, we are already up by 8% of our account in 2 days. If we're trading with a Pro Firm account, that's already phase one. So most Pro Firms, you need to make 8% to pass phase one. Your phase one would have already been passed. If you are trading with your private account, maybe you would have already made 20% of your account, because maybe instead of 1%, you are risking 2%, you are risking 3%. Can you see this? Can you see the potential in this particular strategy? We can go on and on and on and on. Go and backtest this strategy. Go back as far as you can to backtest this strategy. You see how effective it is. And you only be able to look for data that can suit your style of trading from backtesting. From backtesting, you'll be able to start seeing, okay, this, I prefer to trade this asset, I prefer to trade this currency pair, I prefer these sessions more than this one. But I said, just for a recommendation, stick to the Tokyo, the London, and the New York. Just looking at Tokyo, just look at this. Look at 2%. This was the last candle, the last candle before this line shows us where the session starts, right? So the last candle before the line, before the session starts, was this one. So sell stop will go there. Our buy stop will go there, our sell stop will go there. Then you can see clearly our sell stop was triggered, stop loss was there, and we made cool 2% before the market even opened. Can you see? That was it right there. New York, can you see? Do I even need to go far? Do I even need to go to other assets? Go to other assets. Even German 30. Go to even German 30. You'll be perplexed. You'll be surprised of how effective this strategy. Go to even German 30. Let's go here. Look, this is German 30. Just opening German 30. This would have been the last candle before our session. This one. Meaning our buy stop would have been above that candle. Sell stop would have been there. London, boom. You can see what happened. London opened. What happened? Sell stop was triggered. Remember, our stop loss was there. Went for a risk to reward of 1:2. Boom. Can you see that? Any asset that produces a candlestick, you can see how effective this strategy is. Go back and backtest. You only be able to look for data. You only make success with this strategy when you backtest different strategies, different scenarios. Should I use a stop loss or not? Should I use a trade? Should I trade my stop? Should I delete what the next stop pending other ones? This one is triggered. That's when you'll be able to, you'll be able to journal. You can see books like this. This book is strictly about these strategies. And you can see I recorded everything. I journaled everything from the start to the end so that I can see which one that can perform. So this is a borrowed strategy from Godlove University, which I'm bringing to you guys so that you can also find success in Forex trading. There's enough money in the Forex market for everyone. $6.6 trillion transacted every day. So the fight is always with poverty, not with one another. All right? The fight is with poverty, not with one another. Let me know your thoughts about this strategy on the comment section. Give it a try. Watch this video as many times as you can. Share it with your buddy which you want to make money in Forex trading with. Share it with your family members, your friends. You are helping to impact another person's life by sharing a video like this to them, because it is only on my channel that you'll be able to see this strategy configured in this way that can actually work. So share your thoughts on the comment section. Let me know as you are backtesting. Come back to this video and share your experience. On TikTok as well, I do share my snippets of my trades on a daily basis. So make sure you're also following me on TikTok so that you can see examples like this in real life. Join my free Telegram community, because on that community is on a daily basis. You see traders using that strategy on a daily basis. And since this is a Godlove University borrowed strategy, if you want to learn almost about 4 different strategies which my private students are using to make money on a daily basis, just click the link on the video description and you'll see the link that says Godlove University. Godlove University per se is my institution, is my academy, which I've been able to put in place to help you, to guide you from A to Z, beginner to pro, on how to make money in the Forex market. So if you want me to mentor you one-on-one with my 10 years of experience, check out the Godlove University link, and as little as $125 per month, you will be able to enroll in my academy where I will guide you how to become a profitable Forex trader. Check the videos that are also going to be coming at the end of the screen because they will show you this strategy in real life. Also check out my recommended pro firms, recommended brokers. All the links are going to be on the video description. Thank you so much for watching, and I'll catch you guys on these other videos. Peace.